Okay, welcome all. A very good evening to everyone. Welcome to Financial Freedom Program. My name is Samir Bapat, and today we are going to learn about head and shoulders. So, head and shoulders is a very powerful reversal pattern. Am I audible? Am I audible? Can someone confirm if I'm audible? Yes. Okay. Thank you. Okay, thank you. So, head and shoulder is a very powerful reversal pattern. How many of you attended the accumulation and distribution webinar what we had last Thursday, I think? Yes? Okay, fantastic. So head and shoulder is a accumulation and a distribution pattern, and a very powerful pattern where we can understand when the accumulation is happening and when a distribution is happening. It shows us a very clear cut guideline if you look at it, and we cannot go wrong when we are analyzing head and shoulder. It takes time to form. It takes around longer duration to form, as we'll see a lot of examples today. It takes some time to form, but it will give us a very clear indication whether it is accumulation or distribution. Like we know, accumulation happens when some big player is or big players are accumulating slowly without getting noticed. They are slowly buying the share, and they know something is coming up, or they are estimating something is coming up. They go on accumulating slowly the shares, and the head and shoulder pattern forms. Or if the price has gone too high, they start selling out slowly so that they don't attract attention from the common investor, and slowly they hand over all their shares to the common investor at the top and come out, and then after that the share price falls. Since we know we are learning the language of charts, since we are learning the language of charts, the charts will automatically tell us when the accumulation and distribution is happening. If you have not seen the accumulation and distribution, if you have not joined last time the accumulation and distribution webinar, you can see the video. I have uploaded it just now on the YouTube channel of mine. So I will share the link also in the group. So let's go ahead. Head and shoulders is very powerful reversal pattern. If you are holding a stock, you should plan to exit if you see head and shoulder forming at the top. If you are following a stock and you see a head and shoulder forming at the bottom, you should definitely think about buying it and holding it, and it will give us a clear indication. Okay, so everyone, okay, so you can see this diagram, right? This PPT, wherein this is an uptrend. I have drawn this uptrend. It goes up. So this is it will form a curve. Okay, don't expect a beautiful curve. No, it will not be so beautiful as it is drawn in the drawing, but it will be there will be a price will move like this curve first. Then the price will go up, and it will form the higher curve. The head curve will be higher than the previous curve, and after that a lower curve will form. This lower curve is shoulder 2. So the first curve is shoulder 1. Then you can see my mouse movement, right? When I'm moving the mouse, you are able to follow the mouse, right? Yes? Okay. So shoulder 1 is formed, then the head is formed, and then the shoulder 2 is formed. Typically, the shoulder 2 is smaller than shoulder 1. Now, along with that, what happens is, since this is a distribution pattern where the big players are sort of handing over the shares, since it has already reached the top, because this will come after an uptrend. Since they are handing over the stocks to the common investor, what will happen is you see, I have just made a picture as good as possible. See, you see this green candles here below, right? For the shoulder one, if you see the shoulder one, and below I have drawn the bars which are representing the volume. Can everyone see the green and red bars here? Yes, no? Okay. So what happens is when the shoulder, it is going up, the shoulder, the volume is high. As it is coming down, the volume will reduce. Next time, when the head is forming from here to here, when it is going up, the volumes are relatively lower than the shoulder. And the coming down, the volume will be higher than the coming down of shoulder one. And shoulder three, while going up, the volume will be lesser as compared to two going up. And when it is coming down, it will be higher volume. And when it breaks, so we'll draw a line called neck. Whenever it breaks, it will, how far it will come down? If you take the measure from head till neck, it will come down that much. At least it will fall by that much. So if you are holding a stock and if you see a head and shoulder pattern forming and it closes below the neck, get out of the way, so that you will be able to save money, because it is definitely going to come this much low. Similarly, I'll take you the theory and then I'll show you around 5 live historical examples. Similarly, this is the head and shoulder forming at the bottom. So there is a downtrend, the price is coming down, then the price will form a curve. Then second curve will form like this, which is bigger than the first one. The third one will be smaller. What is the difference in the volume? In this, the volume, with every time it goes up, the volume increases. When it is going up, the volume will increase. And when it closes above the neck, how far it will go? It will go to the neck till the top of the head. The same distance it can go. So you can plan to enter the share and it will go up that much distance. Everyone okay with the theory part? Before we go to practical, someone wants to take a snapshot or anything, let me know now. Everything okay? Can I go to the our example? Hello? Volume not clear. Okay. Okay. See, Vipin, see, volume is when the price is coming down, this shoulder is forming, right? When the shoulder is forming, then first the price are going up. The shoulder, the price is going up. The volume will be lesser. When it is going up, the volumes will be lesser. Second time, when the head formation happens and the price is going up like this from here to here, the volume will be higher than the previous volume going up. And the third time it will be higher. I'll tell you in the practical. Okay. Which first slide you are saying, Sandeep? This one or this one? Okay, so let's go to the straight away dive into the real example. Okay. Now, here, if you see, I'll just cut for the sake of understanding. I'll cut it here. Okay. Now, okay. Can you see this just dial pattern here? Can you see the chart of just dial? Hello? Hello? Yes? Okay. Now, see here, if you see, there was a downtrend. There was a downtrend, correct? No, I know you are on mute, because if I allow people to talk, they will talk all of things. Okay, so just type yes or no. That's it. I deliberately keep everyone on mute because we are almost 200 people and it will be difficult for me to manage people. So that's why I'm keeping everyone mute. See, everyone can see there is a downtrend here. The trend came down. There was a downtrend. This price came down. Yes. Okay. Now, after it came down, it first formed this shoulder. This is not a perfect as shoulder as we discussed there. But if you see, it's a like it has gone down and gone up. So this is a shoulder. Fine. Everyone okay? Yes, this is a daily chart. All my examples are daily chart. Okay. Then subsequently, it went down and it went lower here like this, and it went like this. So the second level, it went higher. So this is the head. Now, third, it went down and it went up like this. Okay. Now, this is a second shoulder. So this is the first shoulder. The first red circle is a red shoulder. This is the head and the shoulder. Now, very good, Sumit. So see the volume difference. Now, if I divide it in three parts, okay. If you see when it is going from here to here, this is going up. And if you see the volumes here, the volumes are lower. How many can see that when it is going up, the volumes are lower? Can I have yes from all of you? Yes. When it is going from here to here, this point, it is going from here to here, this half. When it is going up, can you see this volumes here have increased as compared to this volume? This volume is higher. How many of you can observe this? Right? So it started tapering. Second time, the volume has increased. And now from here, if you see again, the volumes have increased. From here to here, if you see, the volumes are higher relatively to the first going up, right? So, correct. So the volumes are increasing as it is going up, the volumes are increasing. Now, what we have to do is we have to create a neckline. How do we create a neckline? Let's take this ray, join the head here, join the head here, and just shift it back something like this. Okay, so this is our neckline. Okay, so this thick line becomes our neckline for head and shoulder pattern. Now we have to measure how far it will go, how much far it will go if it closes above the neckline. So I will delete all the drawings and I'll draw the neckline again, okay? So this is our neckline. Okay, now all those people who are going to ask me to show it again, I'm showing it them again. So pay attention how you will measure the target. Okay, I'm going to show the target, and many people will ask, no, show me again from where you got this and all. So please pay attention. This is the second time I'm showing now, assume. Okay, so go here. How I take it is go here, take this price range, start from the lower part of the neck to be conservative, measure, draw till here, you measure here. So this is the overall head height from neck till head. It is around 70 points. Everyone okay? Can I have yes from all of you? If you got this from head to here, it is 70 points. Okay. Now pick up this and keep it here. Okay, whenever it is coming out, this, let's keep it here and then draw a line here. So whenever it will come out of this head and shoulder pattern, its price is likely, okay, I'll clone and keep it, okay, clone, okay, I'll keep it here. So this is the head and shoulder measurement, and this is our target. As soon as it comes out, it will at least go till this line. So this becomes our target. And once it comes out, let me just adjust my video and okay. So if you see, it has come out from here. So I'll change it to candlestick pattern, and see, it has started. It has not closed, so it has to close above the neck. Once it closes above the neck, we are there. See, volume will also increase as it is going up. It shoots up, and has it crossed? Has it crossed the promised target? Yes. Okay. So stop loss, you can take the shoulder. If it is, as long as it is above the shoulder, the second shoulder, take it as a stop loss. As long as it is surviving above that, you can take this as shoulder. Yes, this is a very powerful accumulation pattern. It goes well and beyond. So let's see how far it went. Okay. Okay, and then it came down. Now, see, I told stop loss just now, I'll tell again, okay? Now, if you see, it went from here, this was our pattern. It went up, and do we see a reversal head and shoulder here now? It's not very neat and clean, so we'll not take it like this. I will show you much neater head and shoulder. So, okay, I'll show you one more head and shoulder to go up, and then I'll show you, let me, where is it on, where it is better. Okay, see, this is one, we saw this one. This was one head and shoulder here, and this is also one of the head and shoulders here. Okay, so if you see, trend was coming down. There is a downtrend, so there has to be a downtrend. Then it formed a shoulder, this shoulder, this is the shoulder, volume, see volume. Okay, going up, volume is there. Then this is our second, this is our head. Okay, then see the volume here. While it is going up, it is relatively higher than the previous volume. Then we have this shoulder 2, and the volumes are relatively okay, still higher when it is going up. We draw the neckline from here to here. As soon as it breaks the neckline, how far it will go? It will go, we have to measure from the neckline till the end of the head. Okay, this is the head. Okay, we pick this up. Okay, and we bring it here, and it is likely to go here and beyond. Okay, so this is how you have to measure. Everyone okay with downward head and shoulder? Is that okay? Can I have yes from all of you if you have understood? Okay. Yes, a breakout candle has to be green because it has to close above the neckline, right? Okay. Now let's see. See what is happening if you see just here. Okay, there was a head and shoulder, not so good. Okay. Now, okay, let me show you another head and shoulder, and then I will come back to you. Okay, when was it? Can Fin Home, September. Okay. See, sometimes it will take so long time. If you see from here to here, it will take a long time. It's almost taking a year for forming a head and shoulder. So normally, uh, uh, a common investor should be always looking at a bigger time frame. Now let's go through this. This is a very, very interesting head and shoulder. See, the price is going up. It went up here. Then the shoulder formed. Now see, okay. Now see the volumes. Observe the volumes. Okay. This is the volume when the price was going up. Okay. From here to here, this was the volumes when the price was going up. This is the head. It took some time to form the head from here to here. See the volumes here. Okay. This is the volume for going up. Now, if you see this going up, see the volume have reduced now. When it was going up, compared to this and compared to this, do you see the volumes have reduced here? Can I have yes if you are okay with this? Can you see the difference of the volume? Volume is going down as it is going up the third time. This is an indication that the distribution to the common investor is over. Okay. Big players are out, and if you see, it lasted, this head and shoulder pattern lasted almost from September, April to September. So April, May, June, July, August, September, right? 6 months it took the head and shoulder. All the gains, whatever happened from here to here, handed over to the common investor, and then how far it will go. So let's see how far it will go. Let's create a neckline. Okay, so let's draw a neckline from here. You have to draw this. This is the neckline. It broke down, it closed below. Okay, and this is the price, this from top till the neckline. So we will take this much and draw it here, and this is our target. So if you are holding this stock and it breaks the head and shoulder pattern, it closes back, get out. Okay, because it is bound to fall till here. Did it reach here? Yes, no? Did it reach the target after breaking down? So this is the power of head and shoulder. Now, a task for everyone who is here, okay? Now, just as we have seen 2 examples, now this is how you get ready, okay? Okay. Now see, this is just dial, okay? This is the just dial for just dial chart as of today. Now, can you see shoulder forming here? How many are okay with the shoulder? Yes. How many are okay with this head right now here? Yes. Now, if you are a trader or an investor in just dial, now what you will do, you will wait for a shoulder to form here, draw a trend line, neckline. If it closes below this, till what price it will go? It is likely to fall till this price. So you have to exit here. If you are holding, you can plan to exit if it is closing. So don't jump the gun. Okay. No. Head and shoulder is forming. So I will exit right now. No, let the shoulder form first. But as you can see the pattern, right? As you can see going up, the volume is here, the volume is here. You have to see if it goes next time, how much is the volume. If the volume is less, then the distribution is happening. Let it close below this line and then you exit. So don't jump the guns just because I showed you something. Don't jump the guns. Let the next shoulder form. Let it break this neckline. then only you can plan to exit if you are holding, and it will go down and it goes down. See, it matches. Again, if you see the fall, it will match with your support resistance levels here, right? So it is not that random target will be formed. It will match with the support resistance level. It will come here, take support. One more example I will show. Hold on. Okay, Amar Raja battery I had written. Okay, so Amar Raja battery. See, this is the Amar Raja battery chart, and you have a head for shoulder forming, a head forming, a shoulder forming, and if you see head to the neckline, and you when it broke down, you measure it here, and you can see it went down till there and below. So this is a distribution pattern. So if you see a head and shoulder, I would recommend the day it breaks downwards, stay away from that stock because it will go down. Okay, I have seen this is the most powerful distribution pattern, and it seldom fails. Very seldom it will fail. Okay. See the volumes when it is selling down, how big volumes are there for selling down, right? Okay. So anything other we have? Just hold on. I'll show one more example. I have written. Okay, Maruti. So it is 19th February 2021. See Maruti here. How many of you can see now head and shoulder pattern? Can you make out the head and shoulder pattern here? Yes. And see volume here, and volume here. See, there is a higher volume, lower volume. Correct? The volumes for every time it is going up, it will decrease. If it's how far it will go down, we have to see the head to neckline, breakdown, and neckline to here. It almost touched like that. See, it went down till there. Yes? How many of you have learned something new? If you have learned something new today, type new. Okay, great. So this other both way around, right? So you have to see for head and shoulders which are at the bottom. See, this is a head and shoulder which is happening a reversal. So if you're looking out for it, when it goes, it will go up. See this head and shoulder, if you are seeing, this is the head and shoulder for going up. So shoulder, it goes up, it will go up. So you can use it for going up. And if you're having the stock and if it is forming head and shoulder, you can plan to come out from that